good morning, good afternoon, wherever you are. This is Two Tokens podcast number 36, I think, and it's all about Next Generation Capital. We are here in the studio with Marleen. Welcome. Actually, I'm welcome in your studio this time.
Yeah. I feel honored though.
Yeah, no, and it's good to be here again. It's been what, a year and a half since our last Next Generation Capital masterclasses, and we did a lot that year in 2020.
We've done so much,
Yeah.
and I'm excited for what is yet to come.
Yeah. Can you, because last year we sent out a press release, if you recall. It was about phase 2 funding.
Of Next Generation Capital.
Of Next Generation Capital.
Yeah, so I'll summarize what we've done over the past year. So we've built a new structure for startup funding. An area, at least in the Netherlands, that is not very much. It's not getting the attention that I think it should get, because especially startups in the range from really early stage up until their first investments of venture capital, private equity, there's not a lot of funding capacity available in the Netherlands. And we should do something about it, because we've got so many great universities over here, such a good business climate for startups actually to start up, and such a good infrastructure to start your startup over here. But there's no funding, and that is really lacking. So that is something we should do something about. So we created this new structure. We call it the N-Exchange vertical, where we intend to finance multiple startups at once by using a tokenized infrastructure. So we're actually going to tokenize multiple startups at once and then offer that as one investment proposal to the market. And I'm so super excited about it. I've been working for so long on this, together with the Two Tokens Next Gen Capital team, but also together with N-Exchange, the regulator, legal advisors, and we're now ready to move into phase 2 of Next Gen Capital. So super excited that we can launch it over here again at Two Tokens, where it all started.
And we should maybe elaborate where it all started, because in 2019, Next Gen Capital, that was the reason for doing Two Tokens, right?
That's what you mentioned, and that's where we found each other, I think.
Because we were asked to find alternative finance for small, medium companies and see if tokenization could be an alternative.
Yeah.
And so here we are.
Yeah, here we are. And so with Next Gen Capital, Next Generation Capital, we really focus on early stage startups funding. And why? Because that is the spot where you can start being efficient in organizing the funding structure around companies. Later on, this vertical structure can be used for small and medium-sized companies, or even large companies, or large ventures, large innovations that are out there, to get to their funding in a more easier, efficient, more democratized way. So, yeah, maybe we should go to a little bit on what we have done.
Because 2 years ago we did a lot of sessions and masterclasses on how to structure, how to do your funding round, how to do program management. What are we going to do in phase 2? Because
so 2019 was all about building the structure. That means that we had to look at it from a marketing point of view. Sorry, I'm saying it's exactly the opposite around. That needed to look at from a regulatory point of view, from a legal point of view, but also from a technical point of view on how are you actually going to build this, from a finance point of view, from an economical point of view, from all those different kinds of angles. We've looked at, okay, how would this structure operate in its most efficient way? And together with multiple talented people, we basically grouped together on the Two Tokens platform to build this, what we call first minimum viable product. In finance, there's almost no such thing as a minimum viable product, but a product that would work already now in the current environment. So from there on, we had to take it to the regulator. And that took some time. It took us almost a year to get the regulator approve our model. The good thing is that almost nothing changed to the model. The very good thing is that there's one step where we significantly simplified the legal structure of the model, the governance, which I will later on share a lot about, like how this is set up. If we go into that right now, we will need a podcast of a couple of hours. And now we go into phase 2, and phase 2 means all about execution. Now,
And for the listeners who are new to tokens and Next Gen Capital, we were awarded funding from the European Union React EU to build a phase 2 of Next Gen Capital and actually bring it to a higher technical TRL level and basically bring it in production.
Bring it into production. And the nice thing about this is that it never, you can't, everything has to be in place to bring it into production. So bringing it into production, in our case, means actually financing 30 startups all at once, where the investors invest in the vertical of 30 startups, but get a direct stake in 30 startups that are in that vertical. You can kind of compare it to a virtual fund, or some people compare it to, is it like an ETF? It's not. It's 30 separate investments in 30 underlying startups. But the mechanism, the new technology, makes it possible for an investor to get the distribution over those 30 startups.
So if I have a startup, I started my company a year ago, and I'm here with my team. We are 5 people. We're doing the Rockefeller habits for the whole 9. We're in the Deloitte Fast 50. How could I participate in a funding round?
Okay, a very important player in this new structure is the program manager. The program manager takes care of the selection of startups, but also the monitoring of startups and the acceleration of those startups. Because if you look at a traditional startup, I think the numbers are approximately 40 to 50% makes it to the 4th life year. And that is very low. And if you see that the startups that go to an acceleration program or through a venture building program, that number increases significantly. So if, for example, if you take Startup Bootcamp's acceleration program, 70% of their startups reach the 4th year life cycle. So that's very important. So you need a good partner that selects and monitors the startups that are going to participate in the vertical. They also have to determine whether that startup is ready, if it's according to certain TRL levels, or to a certain investor readiness levels, and then they are selected to take place in the vertical that they program manage. So once that is done, and it's what we see, that it is wise to do that according to a certain theme. So if a theme could be impact, or it could be deep tech or high tech or AI or robotics or whatsoever, because if you want to offer like a strong product to an investor, we see that investors generally prefer to invest according to
So you create a
certain
basket
themes.
of companies that are all, in, for instance, in sustainable finance or in agri-tech or whatever.
Yes.
And that's the theme for you.
So we start with the team, then the program manager selects the startups that can participate in the vertical, and then that vertical is offered to the investors. And so to answer your question, if you are a startup that wants to get funded in such a way, then you should basically knock on the door of the Startup Accelerator, because this is a way to get funding for your startup, but you do have to participate in the program.
So in a way, the Startup Accelerator, in this case, for instance, Startup Bootcamp, that's your first gate to go through. If you want to pass the program, you have to first pass their gate, if you will.
In our case, yes.
Yes, okay.
Because we think that's a wise thing to do. Because why did we choose for this? If you look at, so we wanted to make startup investing or really early stage startup investing available for the larger professional investors. If you generally look at those larger professional investors, what is the difficulty when they want to finance or fund specific areas in where there's a lot of innovation going on, usually at startups. The difficulty is that they don't have the capacity to evaluate those startups on their merits, because
it's a numbers game.
It's a numbers game. You have to go to many startups to pick out the right ones. But apart from that, there's very specific knowledge needed to be able to evaluate those startups. And yeah, we see that the accelerators are best at this. This is what they've been doing for years. So the capacity and the knowledge that the startup accelerators and the venture builders, I should say, have in this specific domain to go to all those startups and select the right ones, because to get to 30 startups, you need to see hundreds, if not thousands, of startups before you have that selection. So that is one. And then two is you also need a certain... like for a professional investor to invest only, I don't know, 100,000 or 200,000 or maybe even $1 million, it's way too low for them to be able to allocate all the time and effort that they need to do to make such an investment. So you need to reach a certain level of a total investment size that makes it attractive for the professional investor.
So now I have my startup, right? So my dad, my granddad, my uncle, they all invested as some friends, and I'm 2 years around, and then startup boot camps decides that I'm past the gate, so I become part of the program. What happens to those friends and family investors that are already vested in my startup?
Yeah, well, then probably they made they did well by just participating even earlier stage on. But what we do is we do have a model as to how this startup gets funded towards the future, meaning that all the investors are treated equally according to what the program manager decided. So that could mean that all the investors have the same options, but also the same rights, that the startups are structured in a certain way that they can execute those rights if they need to. But on the contrary, there are also a lot of options and rights for the founders, because what we don't want is that those founders are locked in and can never exit this model towards the future, or when a corporate investor, for example, comes, or when a private equity investor comes, when they've passed that critical valley of death, then they should have their options as well. So meaning that you look at good tag-alongs, but also at good drag-alongs, for example, for those startups in the way you structure them.
So you want to protect the founders.
You want to protect the founders, but you also, very importantly, want to protect the investors. And what you tend to see with startups, especially when they get into the VC type of space or into the larger investors, then they need to give away like all kinds of shareholder agreements, all kinds of rights, which sometimes makes it impossible for the startups to get adequate funding towards the future. So what we ask from the startups to participate in the program is protection for the investor, but at the contrary, also a more equal treatment of all the investors that are.
So in a way, you're democratizing venture capital here.
In a way, we are, yes. So, coming back to your startup, where your friends and family participated, could even be a small business angel or whatsoever. We do ask to merge into the new set of rules, the new set of governance, as to how we acquire funding for this startup.
And to be sure, because I don't know how the setup of next-gen capital companies are going to be, and I'm sure we're going to spend a lot of time in masterclasses explaining all that. But basically what we're asking this particular startup to do is merge into a different holding structure.
It could either merge into a different structure or change their existing corporate documentation to the new structure. That's also a possibility. In some cases, that's easier. And for that, you need the approval of the existing shareholders. But we really took care that it's really for the good of the company. Otherwise, they won't take that step. On the contrary, they know once they do that, then certain capital will flow in again for a longer period of time.
So then you have 30 of my startup companies in your basket, right? And you get tokens or shares or tokens.
You get tokens, security
for
tokens.
For every startup, but also for the basket.
So technically we have 31 tokens. And 31 tokens are linked to 30 startups. And the 31st token is represents the basket of those 30 tokens. So that's from a technical representation how it works. From a financial representation, every token represents one ISIN number. You know, when you trade a company publicly, then you get an ISIN number. All these companies will be security tokens who are listed to a security token market, and where they have an ISIN number as well on which they are traded. So financially, every startup has their own ISIN number, their own security token, which is linked to an ISIN number. And then there will be, and this is probably new for the market, then there will also be a 31st ISIN number that represents the basket. Meaning, if you trade the 31st ISIN number, you trade the basket. If you trade one of the 30 ISIN numbers, you only trade the single companies.
So I can spread my risk.
When you buy the basket, you spread your risk. Yeah. When you only buy one company, you basically are allocated towards that one company.
So it should be said that Marleen is, of course, the captain of this use case, and Next Gen Capital is, a two tokens initiative. But really, NXchange is doing it already. But there's, of course, other parties involved here, right? Can you want to elaborate on some of the people that are in the group? And now we're looking for new people in phase 2 development.
Yeah, I'm super excited. That's what I that's what I really like about two tokens, is that you don't do it on your own, and that you spread your knowledge towards representatives from the whole market. It could be a legal advisor, technical. It could even be competitors. It could be anyone who can join the two tokens group to make this product to an absolute killer model, a good model. So in our case, with the first rounds, the legal and the regulatory part was picked up with multiple lawyers, but CMS lawyers, our own lawyer, FM Law, also was involved a lot. Kleber lawyers, they were all involved in the whole legal regulatory part, and of course the AFM. And then on the technical part, multiple parties were involved as well. Our software developers, but also developers from Dusk Network, for example. The Rotterdam, the Erasmus.
Erasmus University,
University was involved with thinking on how the economical model behind it should work. So that was super exciting. It was also very exciting for me because you get so much knowledge, and it improved the model. I should not forget the Share Council, of course, that also was involved. You get so much knowledge in one place, and that really significantly improves the model. So for phase 2, I'm super excited as well, because we're starting off. Now we're going back to the drawing table again. Whereas in phase 1, we only had one table. And then later on, we had in more smaller groups of people, regular sessions. But now we would like to make that broader again. So we're heading towards the first 5 masterclasses, which are starting in, if I'm not mistaken, in May. Everybody will get all the emails and all the invites about it, where we are going to do the actual next level work for the Next Gen Capital on two tokens and on exchange. How is this working? 5 working groups, 5 topics, where people can really follow a masterclass, where we will invite really specialists out of the market. Could be competitors, could be legal advisors, could be technical advisors, etc. That you can join, that everybody who is a member of two token can join. and really benefit from what we've learned so far, but also where hopefully they can contribute to make the next level model better. So super exciting for that. And that, of course, at the end of the year, we will revert back with this is the actual outcome. This is how we go live, because we plan to go live with the vertical by the end of this year. Yeah.
Yeah, and
how can you not be excited about this? I hope
very
that it's
excited.
sort of
Well, and what's good to know is that Two Tokens is a public initiative, but you're doing it already. And what should also be interesting to learn this year is how this works in Europe, right? How are the different initiatives in Europe? You know, we're trading, of course, here in Amsterdam because, you know, we're the center of Europe. But
Yeah.
but how can we trade in Paris? How can we trade? You know, those are interesting questions to ask. Is do you see that you know, panning out in the future? Yeah, because these are security tokens.
The model is set up for these tokens to be able to be traded on any securities, tokenized securities exchange that's out there. Currently, NExchange is the first one. There is no other security token exchange that is allowed to trade security tokens publicly.
And is there a European organization clearing all that?
Of course, because the way the regulator looks at it is it's an exchange in the eyes of the regulator is a security exchange. And our technological platform makes it ready for security tokens. But we need to comply and adhere to the European securities law, which is basically a European regulation. We've got our regulated market permit for it, for our multilateral trading facility permit for it, our brokerage licenses for it. But you see that the landscape is changing, that the next runner-ups are also getting out there in that space to be able to offer a secondary market in security tokens in the future. They will get there for sure. And by the time they are there, then you can actually move your tokens from one market to the other. So yeah, it's kind of, we are a bit ahead of time in the Netherlands.
How about Europe?
Yeah, we are a bit ahead of time, I think, at least in the Netherlands compared to other European countries, maybe even worldwide. But that doesn't mean that the others are not getting there. I always said it will take about 10 years for our competitors to get to that get to that point when we got our first license in 2016. Well, that means that in 2026 probably we will be doing this as if we've never done it before. So that's quick already. I realize that that's in 4 years' time, but in 4 years a lot can happen. So yeah.
Great. And so, last question: how is this going to make how is going to be like tokenization of funding? How is going to do this good for the world?
Well, it's super interesting because we are already in the tryout mode, right? On NExchange, we are already doing this. So the startup vertical is that's really next level. But what we are currently already doing is we are funding a program of 90 startups of Startup Bootcamp currently. The setup of that structure is different towards the startup vertical. But what is so special about this is that we have two buckets of investors now. We have the professional investors of 100K plus, or we should call them accredited investors that participate in funding this program. And we have smaller investors who can invest from 100 euros on in that bucket. And the funny thing is, without almost no marketing, we see that that there's a huge interest from the smaller investors to invest in this new type of asset class, startups. And they are coming in every day. Every day we see new accounts opened up, people taking positions between 100 and 5,000 euros in that bucket of 90 startups of Startup Bootcamp, the Bold Action program. So I think that's a huge game changer. One is because you get those new small investors in the market, you will get more liquidity in an asset class that is not per definite very liquid. But the more investors you get in, the more liquidity you will get. So I think that is very important. And there's also less, if you democratize investments, then you have more shareholders and you have less risks towards that one big potential investor, but it's more spread out now on your community of investors, which is in certain cases very good for the startups, because then they have a different type of audience, investor audience, that they are used to talk to, which sometimes is to the best intent of the company itself, of the venture itself.
Well, great. Thank you for today's session. I really look forward to those masterclasses. It was a lot of fun, and we learned a lot.
Yeah, there's so much to come. So I think by the time we will take this live, then hopefully our link to the subscription of the master classes is ready. So I hope that everybody subscribes. Positions are limited. I think that we can not allow more than 25, 30 spots per topic of masterclass. So make sure that you are there quickly, because otherwise, you will lose your spot.
Well, yeah, and it should be said, we're post-corona, post-COVID, and it would be nice to have those masterclasses in person.
It will be an in-person masterclass, because there always is a different dynamic, a different atmosphere if you are all in the same room. And if you have more time to really, really dive into something and are not limited to an hour where you can do this online or something like that. So this will be masterclasses of a couple of hours. It is a couple of hours of your time, but you will be, you will get such an enormous amount of energy out of it. So I'm personally looking forward to it. And let's see who wants to join. Excited? Are you joining?
Of course, I'll be there. Always there.
Okay.
Thank you so much, and be sure to stay tuned for the next podcast and for the Next Gen Capital masterclasses.
Thank you. Bye.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.